Hello everyone, Brian Hoops, Midwest Market Solutions closing market commentary. It's Wednesday, November the 15th. I'll be on Sirius Satellite Radio program tonight, channel 147, so if you have a chance to check that out, please do. We did RFD TV yesterday and sent that link out. So if you don't have RFD TV or missed the appearance, you should have an opportunity to check that out, and I hope you have a chance to do so. Well, we had higher prices just across the board today. And as much as anything, I think it had to do with stock market weakness. You can see we've been down here last several days in the stock market. And as traders get out of the stock market portfolios, they're going to look for other commodities that are cheap. And we talked about this on TV. And you look at corn, for example, in here. We did have a little bit higher day. It's cheap, 338. I think most of the traders are going to look at longer-term charts. This is a longer-term weekly chart. And they're going to look at that this is a price level we haven't been at in quite some time, so it's much cheaper than what it has been before. They're going to maybe come after a market like this. We had higher prices in soybeans today, did not make new lows and had some short covering. I think the big news in the beans was the NOPA Crush report. It was friendly for bean oil, and I'll show you a chart here as we took off and really rallied this bean oil market today, up 69 points. There was some spreading against soybean meal, just a couple dollars higher. You can see we've just gone sideways in this meal, and that was the strength in the soybean market today. Keep an eye on weather in South America. We're watching Argentina closely. Signs of dryness concerns could send soybeans and corn prices higher, and if it does, we get back up into this range, back up in here above $10 in the old crop contracts. Very likely that's a spot will make some excellent hedging opportunities for you. It should improve our imports if they have some dryness, and it should hurt their yields as well, and that leads to less exports for them, more imports for us. And it's really a two-edged sword. So I think we're going to try and rally back up into this area near $10, $9.99, if we get the right weather conditions along with some export business. We had no private sales this morning, so we've really gone a long time here, closing in on nearly 3 weeks without a soybean sale, and it desperately needs some news. It was a strong day for livestock markets as well. Hogs here were lower early and then rallied. I think we bounced off of this technical support area right in here, this 59.60 area. You can see this is a pretty good spot, 59.80, 85, kind of depends on where you draw your line, but right there is a good spot as any, and we bounced off of that. Cattle did have lower cash trade this week, but some hedge lifting gave us gains, 57 cents there in the February contract, and feeder cattle 27-cent gains. So we closed off the session highs in the live cattle. We were higher than that, as rallies are going to be sold here with the cattle on feed report coming out on Friday and looking for placements 9% larger than a week ago. Hope you have a great night and have had a great day of trade. We'll be back in the morning with our next update. This has been Brian Hoops from Midwest Markets. Talk to you again soon.